Stocks trade range ahead of the Fed Chair Jerome Powell's speech at the Jackson Hole Symposium later this evening. Auto and capital goods stocks gain, while realty and consumer durables sulk. Mid-caps underperform.
Over 2.7% of Ambuja Cement's equity changes hands in the block window, with promoters being the likely seller. Nykaa too sees a 1.4% equity change hands on likely selling by a prominent pre-IPO investor.
Union Defence Minister Rajnath Singh is likely to take up the issue of engine supplies by GE to HAL in his US visit. Any positive movement on this can be a big fillip for the defence major.
It's time again for the half-yearly review of the NSE indices, with analysts expecting a shuffle in the constituents. The Nifty and the Nifty Bank are the key indices in focus. Hello and welcome to Halftime Report. I'm Ekta Batra. With me is Mangalam Malu. Well, it is turning out to be a quiet day, so we're just about biding time at this point in time. And obviously, all eyes will be on what happens with regards to the Fed. The Fed minutes were quite bullish. So let's see whether Jerome Powell will resonate that sentiment in today's speech at Jackson Hole. But besides that, it's a stock-specific week, Mangalam, definitely for our markets. So despite the indices being quiet, if you look at it on a week-to-date basis, there's some smart movers which are there. So, for example, in the broader markets, IFL Securities is up 28% this week. Nykaa is up around 16% this week. Sequence Scientific has rallied around 17%. Interglobe Aviation is up around 9%. So really a stock-specific, stock pickers market, you'd have to say. So, the opportunities continue to be there despite the indices just about consolidating.
Absolutely. And look at some of the stocks which are flying around today. Case in point, literally Interglobe Aviation, which is up around 4%. If you're not flying, you're landing at GMR Airport. That stock up around 2.5% as well. Dixon Tech, TVS Motors, a bunch of stocks, all of them in focus. But interesting, moves in today's trading session from an advanced decline standpoint. All through this week, first 4 trading sessions, if you look at it, the advanced decline lines were far apart from each other, but now they're getting slightly closer. So today, the difference is just about 300 stocks as against the 500, 600, 1200 stocks that it would be over the last 3 or 4 trading sessions. And in that, the mid-cap index is a slight underperformer. So that's something we need to keep an eye out on, even as the Nifty is moving higher, just about 150 points away from that 25,000 mark as well. The question is whether we, see some bit of a fatigue after the rally that we've seen, or should we consolidate before the next up move? The answer to that would obviously come from the global markets and more specifically the Fed Chair's speech at Jackson Hole today. But speaking about a lot of individual stocks, Ambuja Cements, that's the one that's trading in green after a big block deal where nearly 2.7% equity changed hands. Nigel joins in with some more details. Nigel.
Well, that's right. This deal was something that we here at CNBC-TV18 had hinted about. Nimesh had spoken about it at D Street Chatter, and my colleague Sudarshan as well had briefly spoken about it. So this deal was anticipated, and early this morning around 6.8 crore shares did change hands, and that's where the promoter entity could raise a few thousand crores. Now, the base size of this deal was fixed at around 600 rupees, but the deal got closed at around 625 rupees per share. Some part of the street was short on the stock because of that discount in comparison to yesterday's close, but the deal took place in block window, and that's why those shorts are scrambling for cover. Just to put in a couple of alerts, in October 2022, the promoter entity went ahead and they issued shares worth close to around 20,000 crores to themselves at a convertible price of around 419 rupees per share. And in the last 3 quarters or so, that entire conversion has taken place, which made the promoter entity's stake move from around 63% all the way to around 70%. Now, post this deal, well, the promoter entity stake will come down to around 67.5% or thereabouts. The reason the stock is higher is because the trade took place in the block window, so all those shorts had to scramble for cover. And also, there is a preference for larger cap names in comparison to mid and small cap, given the kind of inorganic growth that we're seeing. Back to you.
Okay, all right, Nigel, thanks very much for that. So that's on Ambuja Cement. But two-wheeler stocks are in focus. This is on the back of a fresh brokerage note from JP Morgan. Nimesh is here with the details on our special segment, Standout Brokerage Reports. Nimesh, over to you.
Thanks, Ekta. So all the two-wheeler stocks are buzzing in trade on the back of that JP Morgan note. They've actually upgraded a few stocks. The first name is TVS Motors. They've upgraded the stock to overweight from neutral. They've raised the target price to 30.50. Interestingly, even UBS has put out a note on TVS Motors today. They further raised the target price to 3,200. This seems to be the most aggressive as far as target price is concerned on TVS Motors. The other name is Bajaj Auto. Even that is buzzing on trade. While JP Morgan maintains an overweight stance, there they've raised the target price to 11,225 on Bajaj Auto. On the other side, they've downgraded Hero Motor to neutral, target price of 50 to 30, and they remain cautious on Eicher Motors with a neutral rating and a target price of 40 or 45.10. Now, in the auto sector, JP Morgan believes that the two-wheelers are in a sweeter spot compared to the four-wheelers. They expect the growth in the two-wheelers to be much higher than four-wheelers, at least in the near term. Even the electrification in the two-wheeler space has picked up, but again, it's at a very gradual space. So on back of it, they do not expect any margin pressures for the incumbent players, at least in the near term, in the two-wheeler space. For TVS Motor, JP Morgan believes that the market share gain is quite resilient, and hence they've raised the EPS estimates for FY26, FY27 by nearly 5 to 18%. On Bajaj Auto, JP Morgan says that it's a potent combination of ability and intent. So on back of that, they've raised the EPS estimates for Bajaj as well between 3 to 5%. So on back of this, a big upgrades coming in, both on TVS Motors as far as the rating is concerned, and on Bajaj Auto, they've raised the target price now to 11,225.
Incredible, Nimesh. Thanks a lot for pointing that out. Both those stocks among the top gainers in today's trading session. Speaking about the TVS motor space or the two-wheeler space itself, TVS Motors has rolled out their new Jupiter 110cc scooter, which will replace the old model. The new scooter is priced at over 73,000 rupees. Ex-showroom will be available in 4 variants. The scooter will be competing in the ICE category, which is the internal combustion engine, with the likes of Honda Activa and Hero Pleasure Plus as well. Parikshit Luthra caught up with the CEO K.N. Radhakrishnan on the new launch and what TVS expects from this festive season as well. Insightful discussion that. Hear that out. All right, we'll just try and get Parikshit's conversation with the management out there as well. But that looks like an interesting bike available in 4 variants, 4 different colors. Any of them you fancy? 73,000 rupees, not particularly. I don't know how that would compare with all the others there.
I would just get scared of the Mumbai roads riding them, but nonetheless, the colors look so attractive. I'm sure they're getting that female audience through with these exciting colors that you can see.
And the metrosexual men as well who love these
yes,
colors.
I wonder if they have
ads.
like a pink scooter as well.
They do actually. In fact, it matches exactly with your
That would
outfit
be
and my
really
tie.
exciting.
One of those will come up for you. I saw the blue one. I saw something in rose gold, and the third one was pink in color. If I remember, the visual keeps playing once again.
So they're really expanding their audience base or their base of customers with regards to this. So definitely looks really exciting at this point in time. But let's get to something else which is not probably that exciting as a scooter. It's paints, but it's as colourful.
It's as colourful, in fact, much more than scooters. So let's talk about that itself. What's interesting about the sector of paints is that everyone is on the sidelines. They're slightly either hold or sell on the leaders, largely because of the big disruption that has taken place over the last couple of years with new entrants coming in, and the major one being Birla Opus. In that, Nuvama has actually come out of the note saying that they have an anti-consensus buy on the 3 key paint players. Who are the 3 key paint players? It's Asian Paints, Berger, as well as Kansai Nerolac, and Indigo as well. They like Pidilite as well, which is looked at a proxy to the paint companies as well. Why is that? Because if you look at 3 particular things. One, the outlook is improving when it comes to demand. Secondly, the raw material factor is playing out as well, which will aid their margins. But thirdly, most importantly, now people are, not as scared of competition as they would be earlier itself. So let's break all of that down. Nuvama says paint players expect double-digit volume growth for FY25. Volumes will be aided by rural uptake. Paint companies have taken 1 to 2% price hikes as well. And as a result of which, their earnings would be, margins would be maintained. Crude oil and other raw material costs are near 1-year low itself. That's as far as the overall macros of the industry are concerned. On competition, a lot of them were a little circumspect about 6-7 months ago. But now, as conference calls have happened and commentary has come by, Asian Paints have said that the new launch seems to have underperformed expectations. Berger Paints on competition has said initial enthusiasm of the new entrant appears to be fading away, including among dealers. Kansai Nerolac has said higher confidence versus what they had 6 months ago in their ability to compete with the new entrants. And Indigo Paints as well, they're the 5th or 6th largest player in the country. They are saying they've observed no changes in the competitive landscape or in pricing pressures as well. So competitive fears are abating while the demand macros are improving. With all of this, are the valuations reasonable? That's what Nuvama believes. Why is that? Because Asian Paints trades at 49 times 1 year, 2 year forward earnings. Berger Paints at around 47 times as well. Indigo Paints is 35 times. So valuations are normalizing as against the excesses that we saw a couple of years ago. The only thing that I would be tracking going forward is that up until now, all the commentary on competition has happened in a time when the competition is, one, scaling up. Secondly, we haven't seen a full festive season. So how Birla Opus scales up in the festive season is something that I'll be watching out for. For the industry itself, how is the overall festive demand? And raw material cost environment is something that we're looking for. Because these companies have taken price hikes, even as crude oil prices have declined. Will they stay lower here, or will there be a lot more volatility is something that we'll eye. So these three things will determine what happens to the paint stocks over the next 6 months.
Okay, all right, Manglam, thanks very much for that. So those are paint stocks in focus, but let's move forward. The NSE index constituent changes are on the cards and may be announced this evening itself. It changes likely in the Nifty 50 and Nifty Bank indices. Vivek is here to tell us which are the stocks which could be shuffled around and the impact it could have on flows as well. Vivek.
Well, that's right. So, most likely today evening you will get to hear from the Index Maintenance Subcommittee of the NSE indices. Remember, they will review all of the NSE indices, and across all of the indices, the NSE 50, the Nifty 50, the Nifty Bank, the Nifty Next 50, along with all of the other sectoral indices, they will look at the constituents and decide whether there needs to be any additions or deletions. The ones that we are tracking closely are the ones most likely where you will see changes in and where there will be passive flow impact. So the first one that we are looking at is the Nifty 50 itself. Now, as per IIFL, two likely inclusions that could come in. The first one is trend, and if it does come in, IIFL estimates that there could be inflows of close to $422 million into the stock. Bharat Electronics is the other one that they believe can make the cut this time around. Almost $400 million of inflows Bharat Dynamics could see, and they would be coming in at the expense of LTI Mindtree that could see outflows of close to $177 million, and Divi's Laboratories that could see outflows of close to $219 million. One thing to remember is that these calculations are made taking into account that there will be no fresh F&O inclusion stocks. In that case, there could be changes. The other set that we're looking at quite closely is the Nifty Bank Index. So Canara Bank is a likely inclusion, close to $80 million of inflows. It could come in at the expense of Bandhan Bank that could see outflows of close to $40 million.
Okay, all right, Vivek. Thanks very much for that. So that's what the index constituent rejig could look like. There's some important news which is coming for Lupin, which should flash on your screen soon. They have received Health Canada approval for their biosimilar pegfilgrastim. Now, that's generally important because they're making inroads within the biosimilar space. They've got approval from Health Canada. It's not as big a market as the US, but it's generally always a precursor that if in case you do get approval in the Canadian markets, then you would probably get approval more easily in the US markets as well. So nonetheless, important from that perspective that they are making inroads into their biosimilar segment. They've received approval for pegfilgrastim, and that is the Health Canada approval. So maybe that should come up for you soon. We'll take a short break. Once we get back, we'll get you an exclusive conversation with Anand Agarwal, who's the CFO of V-Mart Retail. Stay tuned. Welcome back. Well, Star Health Insurance is in focus. Sources tell CNBC-TV18 the insurer is exploring a foray into motor insurance markets. Yash has exclusive details on this. Yash.
Well, Ekta, it's a very interesting and a large development if it materializes for Star Health Insurance. Right now, Star Health Insurance only operates in the health insurance market. But as we know, that a composite insurance license is in the process of receiving a clearance from the government, and subject to that clearance, what we've been given to understand from our sources is that Star Health Insurance is also exploring and planning for a foray into motor insurance segment. What we've been given to understand from our sources is that very recently Star Health Insurance conducted a survey amongst its distributors, amongst its partners, its underwriting team, and the response to the idea of entering a motor insurance through a composite insurance license is something that Star finds really attractive at this point of time. In the past, Star has of course publicly expressed intention to enter the life insurance segment, where they want to look at selling protection life insurance products through composite insurance license. So of course that is one market which would be getting added provided composite insurance license does get approved, and this is a new business segment which we've been given to understand from our sources that Star plans to enter. As far as the motor insurance market is concerned, it's one of the two largest segments for general insurance companies. In FY24 itself, all general insurance companies collected about 1 lakh crore in premium when it comes to the motor insurance vertical, and Star does have a fair chance of making it big in that segment because of its distribution network. It has about 7.1 lakh agents employed with itself for the distribution of its products. It has about 887 branch networks. So of course on the distribution side, it does complement Star's plans to enter the motor insurance segment, and that will be one very important trigger going forward if indeed a composite insurance license does come in, and then Star positively moves ahead with that particular intention of entering motor insurance segment.
All right, Yash, thanks a lot for that. That's a decline of almost 1.5% that we're seeing on Star. Remember, the management was fairly positive on its FY28 outlook in the conversation that it had with us from the sidelines of the Motilal Oswal conference. The stock was higher in yesterday's trading session as well. But let's talk about the consumer sentiment. After several quarters of muted consumer sentiment, value fashion retailer V-Mart is starting to see some betterment, but sales per square feet still not close to pre-COVID levels. The company's CFO Anand Agarwal told Shilpa Ranipeta in an exclusive conversation on the sidelines of the RAI Retail CFO Summit.
Definitely, there are some betterment which are happening, and especially in the tier 2, tier 3 segments where we sort of specialize in. And this particular segment had definitely been slightly subdued for the last 3 years post-COVID due to a variety of factors. But more than that, I would like to stress that we have taken a lot of actions in the last 1 year, a lot of projects that we've been working on in terms of improving the product profile, in terms of improving the pricing, in terms of also improving the look and feel of the stores. So there's a lot of work which has actually gone in terms of what we wanted to change, and some part of that has now started to bear fruit for us.
Right.
So the improvement that we see is not just coming in from the macro getting better, but also a lot of it coming from what we have been able to turn around within the organization.
Right. But from a macro point of view, if I'm to talk about, do you feel that it will take a few more quarters before demand sort of really returns? What is your expectation?
No, definitely, it's going to be a slow recovery. It's going to be a slow growth, but definitely, my sense is we are, getting better, and every month is getting better. In terms of performance, in terms of sales per square feet, we're still not as close to what we used to do before COVID.
Right.
So definitely, we still have a lot to catch on. But yes, the progress seems strong, and the growth is visible. So yes, it might take a couple of more quarters to get back to where we really want to be.
Fair enough. And, your sales per square foot this quarter was the highest, I think, in about 4 years, if I'm not wrong. Do you think that sort of growth right now will be sustainable for you with a sort of hope for revival going forward? And what's the trajectory that you have in mind when it comes to same-store sales growth also? How do you see that sort of going for this fiscal?
No, definitely we are working towards betterment, and all indicators are there that we should be able to get where we want.
Where is that?
We first want to get back to pre-COVID levels, and that's the first target. So that's the entire organization is working towards that. In terms of same-store sales growth, definitely I think mid to high single-digit same-store sales growth should be possible, and that is what definitely seems visible right now.
And finally, I wanted to understand with respect to store expansion, the last couple of quarters, in fact, generally retail players we've seen a slowdown in the store expansion plans. A lot of store rationalization also has taken place. Do you think, given the slowdown that we've seen in the past couple of quarters, that going forward for you also, are you slowing down on your store expansion or looking more, sort of doing store rationalization? Will you be focusing on closing down more stores? Sort of what's the strategy there?
So I think weaning out any loss-making stores or any part of the organization is absolutely a hygiene, and it's not about a slowdown or a aggressive growth strategy. As a strategy, we always look on growth, and we will keep opening stores, and we will keep opening more and more number of stores every year. There's no question around that. But having said that, yes, we have also, cleaned up some part of our network. In the last 2 years, we would have closed at least 30-35 stores. So these are, standard or regular exercises that you keep on doing, depending on how the macro or the environment is looking like, and particularly for the locations that you were not successful or so successful in. But yes, going forward, we are very, gung-ho about the future, and we are very, ambitiously looking at growth coming in from new store expansion.
All right, that's slightly optimistic commentary coming in after months of subdued consumer sentiment from the management of V-Mart Retail, a value retailer, mostly in the northern part of the country, now increasingly in the southern with the unlimited stores as well. Take a short break, come back. On the other side, we have Mr. Rajani of HDFC Securities joining in with some trading strategies. Welcome back. Let's get you an update on a bunch of these buzzing stocks. Just keep an eye out on Interglobe Aviation, up 5%. Dixon Tech is doing extremely well. We're looking at MCX as well. That one's seen some traction over the last few minutes or so, moving to the high point of trade. Precision Camshafts definitely stands out as one of the broader market movers this week, up nearly 35% just this week itself. And PC Jeweler, we did put the spotlight on the jewelry sector in yesterday's value plus segment on our show here, and that stock continues to do well. In this year itself, it's rallied about 145%. A bit of a turnaround candidate, but again, it's fraught with a fair amount of risk, so we'll keep an eye out on that one as well. This year, up 144% on PC Jeweler. With the frontline indices just, flitting between red and green, perfect time to get you some updates from the F&O pack as well. If you look at the Nifty as well as the Nifty Bank, yesterday's FII index futures action tells you that they went long on Nifty Bank and they sold some of their Nifty futures. So let's see how the Nifty Bank pans out and behaves post 51,000, because at the lower level around 50,700 there is the 20-day moving average, which is the support. But on the way up closer to 51,400 is the 50-day moving average, which needs to be crossed comprehensively for the Nifty to go past that 24,800 to 24,850 sort of resistance hump as well. The other important index to track today will be the IT pack. The IT pack has also been alternating between gains and losses all through this week, and now is currently sitting with a cut of almost 1%. And ahead of the Fed event, usually, the street likes to go long into the Fed event, and if that were to happen, the first signs of that would be visible on the IT index itself. Advanced decline. We spoke about, how over the last 4 trading sessions, the number of stocks which were advancing were a lot more than the number of stocks which are declining. Now those lines are coming closer, more so in the last 15 minutes or so itself, with the this split being right down in the middle itself. So with this sort of up move that we've seen already and consolidation, the street is bracing itself for a bit of a range on the frontline index. What is that range? 24,800 is the fulcrum. So the 24,800 put is fairly active, telling you around 24,700 there would be some sort of support. But even so, on the 24,800 call, we've seen some positions being built, telling you between 24,800 to 25,000 could be some of the resistance markers for our indices. One stock which will be in focus is Balrampur Chini, enters F&O, most likely to enter F&O ban in today's trading session after exiting it from yesterday's trading session as well. So keep an eye out on that.
Okay, all right. So that's the FNO update coming in. We have Vinay Rajani of HDFC Securities who joins in to discuss what he's tracking today. Vinay, hi, welcome to the show. Well, the markets are definitely quiet in terms of the indices, but the action is definitely beneath the surface today. So tell us stock specific. Let's start with that. What are you tracking?
Yeah, so basically Nifty has been rising for 7 trading session, and this move has been very gradual and slow. If you were to look at the broader market, as you said, that the broader markets are much doing better, and the Nifty micro cap index has hit an all-time high in today's session itself. Small cap is not that far from its all-time high. So in a way, mid caps are showing strength. So as of now, sector-specific and stock-specific bullishness is there, and some FMCG, IT, and pharma. These are the three defensive sectors which are continuously doing good. So I think many large-cap FMCG is still giving good breakouts like Hindustan Unilever, Dabur. There is a breakout on those charts, so those can be tracked. Some pharma stocks to be like Torrent Pharma, that is also looking good. Some telecom stocks like Bharti or Airtel is also looking very strong. And today, after long consolidation, this auto index started performing well. So the two-wheeler space, especially Bajaj Auto and Hero MotoCorp, have started performing. So overall, sector rotation is going on. I am expecting that the markets to remain bullish only. On the higher side, there is a resistance between 24,850 to 24,950 zone. But overall, the long should be held, and I think the stop loss for the long position should be kept at 24,650 and keep on trailing basis so that we can ride the rally. So overall trend of the market is bullish, and I'm expecting that Nifty will hit a new all-time high about 25,100, and the sectors which have not performed now can do well. Like Bank Nifty is yet to perform in this market. So sector rotation will be there, and right now, no doubt, in a consolidation market, we are getting a lot of opportunities. I think FMCG index is I like the most for 1 to 2 days trades.
All right, 1 to 2 days trade, FMCG is what you like the most. Do you have any stock-specific recommendations here?
Yeah, so I like Hindustan Unilever, which is a large cap FMCG stock, which has just given a breakout from the long consolidation. So Hindustan Unilever looks very strong at 2,800. Stop loss for the traders can be kept at 2,750, and I'm expecting a target of 2,900. So 100 rupees upside could be there, and 50 rupees stop loss should be there.
Okay, all right. Vinay, we're going to leave it on that note. Thanks very much for joining in and speaking with us and giving us all of those strategies. Well, for the markets, it's extremely quiet, but like we've mentioned, there are a lot of specific stocks. The other one which stands out is Wockhardt, which has gained around 139% this year. And the reason for the move that we've seen in Wockhardt is really on the back of their research arm and what they could be doing with one of their key molecules, WCK-5222, which is basically being studied for anti-infectives, or basically an antibiotic, and combat superbugs. So basically, so that's the reason why you're seeing this continued traction come into Wockhardt. That stock at over 1,000 odd rupees at this point. Well, we take a short break. More on the markets once we're back. Stay tuned.
Welcome back. The stock of the moment definitely is Nykaa. It's had a very, very strong week backed by good volumes, etc. as well. Remember, in the previous week, it reported its first quarter numbers, and they did indicate strength in some of their core sectors in an otherwise muted consumer environment. This morning, the stock was in focus also because one of its earlier investors paid about 1.5% stake in the company. That supply has been taken into and has been absorbed, and as a result of which the up move on the counter continues. So just keep an eye out on that one, along with a bunch of others as well. Yatra Online, for instance, has been making highs since the morning and currently has trended further higher with a gain of almost 5%. So Yatra Online is the intraday chart that comes up for you. Well, yesterday we also had the minutes of the RBI Monetary Policy Committee meeting of August 8, which were disclosed. And the key takeaway is the deep division in the MPC about how strong growth is and how bad is food inflation. Tata joins in with that schism.
The minutes clearly show a very deep division in the MPC, with 1/3 of the members clearly believing there was a rate cut space, and the majority, 2/3, not agreeing. But we must remember that we were already aware of this. The voting was known. The two members who disagreed, Dr. Verma and Dr. Ashima Goyal, spoke to CNBC TV18. And the minutes also indicate that they believe India's potential growth is actually much stronger. It should be 8% plus. And by keeping the interest rates as high as 6.5%, the RBI is restricting, or the MPC is restricting the economy from achieving that growth, what they would target is the real rate, that is 6.5% repo rate minus the actual inflation. The year-ahead inflation, according to RBI, is 4.4. So Verma says 2.1% difference, the real rate, is too high. 1.5% is enough, and that will help India achieve. The important point that both of them make, and more Verma strongly, is that actually the Indian economy is slowing. The corporate results of the first quarter saw more downgrades of earnings. The profits came in lower than expected, and they're also pointing to the fact that core inflation is only at 3%, which means there is not enough demand in the economy. So they're very strongly arguing something which the other four members are not buying, and that's more important because the three RBI members and one external member, Dr. Bide, including the governor actually, strongly believe that growth is good. And when growth is good, it gives the MPC the space, the elbow room, to chase down inflation all the way to 4%. And the fact that food inflation is very high persistently, and very important ones, as Patra points out, pulses, cereals, etc., indicates that there can be a spillover into a generalized inflation, and therefore the MPC should not leave out its vigil. The important point to note is that this is the last MPC meeting for the three external members, Verma, Goyal and Bide. Their 4-year term ends, and in October we will have a fresh set of three external members. If the governor's term indeed ends in December, then there will be a fourth new member, and if Deputy Governor Patra's term ends in Jan, as it is supposed to, they all can get extensions, governor and deputy governor. But going by the current term, 5 members will be new by the time we come to the February policy.
Okay, all right, Latha, thanks very much for that. Let's also listen in to what the external members of the MPC had to say on this.
A very high real rate makes capex unattractive to the corporate. And if demand is inadequate, that also does that. And restrictive monetary policy is one of the things driving demand as well. If we think that demand is deficient, that the economy requires very large fiscal support because private demand, the private consumption expenditure is not growing, then we have to ask, what have you done? Is monetary policy part of the problem?
The budget deficit is conservative. It's on the fiscal consolidation part. So the excess demand stimulus from government is going down. And so there's space for monetary policy to support demand more. And we're not using that space. So we are restraining growth.
It's not the supply side alone. I think that is important, looking at the growth rate. In that context, 7% growth rate appears to be fairly strong growth at this point. So I think, if we need to raise this 7% growth to 8%, I don't think the present demand conditions support that. Inflation on the major components of the basket of consumption is moderate.
All right, with that, we'll slip into a short break, come back, get you more on the markets, also put focus on a couple of buzzing stocks, the likes of Lupin and Shyam Metallics.
Well, Shyam Metallics and Energy is surging in trade after UBS has initiated coverage with a buy call and a target price of around 1,200. The brokerage says the company is on track for higher profit growth and forecasts an EBITDA CAGR of 39% over FY 24 to 27. In fact, earlier today, we did speak with the company's vice chairman and managing director, Brij Bhushan Agarwal. Listen in to what he had to say.
The time to come in next 3 to 4 years, we expect that we should be able to cross more than 70 to 75%. And most of the investment is on the downstream side, on the value addition side, and also going backward on the cost side. Whatever margins we are doing today, it has to enhance because, you are seeing all the downstream projects will add more value forward, and the investment backward is also reducing the cost. So definitely the margin should improve around close to 4 to 5% in the time to come. Yeah, because if you see, all the downstreams are not very heavy capex, and it's all value add, little different. So definitely the ROC has to go up further because it's majorly on the downstream is creating more margins, and the capacity what had to be added on the upstream side has already been added, and most of the downstream, 70-80% of the raw material, we will be consuming. As Shyam Metallic is always a very investor and stakeholder friendly company, we would like to abide whatever is in the interest of the company. We would like to go on that.
All right, that's about Shyam Metallics. Some profit taking today after a big rally yesterday. UBS has a target price of 1200. The management speaks about a bright future for the company as well. But Lupin, that's the stock on our radar. An approval coming in from Health Canada, Ekta?
Well, yes, not just any approval, but an approval for biosimilars, which are definitely much more complex to make and probably has more of a market for Indian companies to probably get into. Remember that Biocon became the first company to get approval for pegfilgrastim and trastuzumab in the US. So that's basically, to give you an idea in terms of the familiar ground that biosimilars has for Indian companies as well as the entire pharmaceutical space. But nonetheless, so Lupin now has received Health Canada approval for the biosimilar pegfilgrastim. The product will be marketed as under the name Arm-Lupeg. Now, it will be manufactured at Lupin's biotech facility in Pune. And it is going to be, it's basically a drug or a biosimilar which is used for cancer. It increases the production of white blood cells. Now, the overall impact is positive for Lupin simply because it is the second biosimilar approval that they've received in Canada. So hence, they are, building their base in terms of biosimilars in other markets. For the US, when it comes to pegfilgrastim, interestingly, Mangalam, the application is being processed in the US. They've completed remediation for the biotech facility, which they had received observations for, and they've now submitted it to the US FDA. So once they get that particular plant approved by the US FDA, once they're happy with the remediation, that's when they believe that they'll get approval for pegfilgrastim.
All right, so that's about Lupin. Just before we slip into that short break, pull up the intraday chart of PCBL, the erstwhile Philips Carbon Black Limited. What a move it's had. There is the investor day of the RPSG group, which is currently underway. But remember, at the earlier part of this month itself, the management did speak to Shireen and did speak about its optimism, in particular about the Philips Carbon Black business itself. The stock continues to rally since then. This week, it's up around 15%, moved to the high point now. But this month itself, it's seen a rally of nearly 42%. So, this month chart comes up for you. The last 7 days, 24%. This month, 42%. And if you look at it from the start of this year itself, the stock has nearly doubled. 85% up move is what we've seen on PCBL from, the start of 2024. This is the last 30 days, where it's a 64% up move that has come by. Management's positive. The street likes it. And seems like, there are positive comments which are being made right now in the investor day, which is currently underway too. Take a short break. Come back, focus on all things commodities. This time, the jewelry space. C.K. Venkatraman, the MD of Titan, joins in.
Welcome back, and joining us on the show now is Mr. C.K. Venkatraman. He's MD Titan Companies. Titan has actually opened its 11th Zoya store, and this time in Chennai. And joining us now is Mr. Venkatraman himself to talk about that. Mr. Venkatraman, hi. Thank you for joining us. Well, the luxury segment in India has continued to grow. We've seen that in various sectors. Would you say that there is maturity and pickup in the segment, especially when it comes to the jewelry as a sector also?
Yeah, very much. I think it's also a new type of customer who is becoming, wealthy, who is very discerning, knows the value of finer things in life, realizes that the wealth and the income is actually for enjoying as opposed to just saving, and also becoming confident about herself, including confident about Indian brands and carrying off Indian brands, believing in Indian brands. So within the overall luxury explosion, there is also an increasing opportunity for brands of Indian heritage, like Zoya.
Well, when it comes to Titan, you have Zoya and Nebula positioned just right for all of that. What is your sense now going forward for these luxury brands within the house of Titan? How are you positioning them, and what are the expansion plans going forward?
Yeah, so, we have been very, very particular about the manner in which, Zoya should be presented, and we have actually really sharpened every aspect of it over the last many years. And we have reached a stage now where we are very satisfied with all the aspects of Zoya. And in a way, it's been at the right time, I would say, the state that Zoya has reached today. And we're looking at a growth rate of in excess of 40% CAGR for the next decade, I would say, perhaps, certainly next 5 years. Opening between 3 and 5 stores of Zoya because we are particular about which city, which neighborhood, taking into account the kind of customers we cater to. So 3 to 5 stores every year, 40 to 50% growth CAGR. That's the kind of ambition we have for Zoya.
All right, 3 to 5 stores every year and 40% CAGR of growth as well in the next 5 years. How are you also looking at this festival season in terms of cues and trends? And would you say that the duty rate cut does do the support?
I think the duty cut has given a fabulous psychological input to customers of jewelry in India, and I'm sure, and it started showing up as soon as the cut happened, and I'm sure it'll continue. And the overall outlook for the jewelry industry for the festive season is very strong. It's also been confirmed by the kind of business that happened in the India International Jewelry Fair, which ended just. The orders have been very, very strong. People are very bullish, and we are, very confident in any case, given that we have strong brands in every category of the jewelry industry. Between Tanishq and Mia and CaratLane and Zoya, we're pretty confident and bullish and excited about the next many months.
Oh, well, absolutely. So while, of course, gold seems to be doing quite well, Mr. Venkatraman, and the duty cut has been supportive, when you look at within the company, how would you look at gold jewelry and the studded ratios as of now? Has there been any improvement?
See, the jewelry market is so large. The wedding market is so large, and Titan's participation, the share of Tanishq in the wedding market, in a way, trails its share of total market, and therefore the upside sitting in the gold business for Tanishq is very, very large, and Tanishq will continue to maximize that independent of the growth rate in the diamond jewelry side, the studded side. So the share is not an end in itself, the share is a result. The growth rate in diamond jewelry is what we are focused on, and the growth opportunity in the gold jewelry is very large because we were intrinsically a leader in the diamond jewelry for a long time till we started focusing on gold. So the share may fall, it may grow, I don't know that. It's a result. The growth rate is what we chase. But as far as Zoya is concerned, Zoya is in a very different space. Even things like gold rate don't really have a bearing so much on the Zoya business because the customers of Zoya are a little removed from all that, I dare say. And so the Zoya brand plays in a different space. Tanishq and its Mia and CaratLane play in a much, much larger space, which is influenced by these factors a little more. But the share of diamond jewelry is not an end in itself. It's a result.
All right, we hear that, Mr. Venkatraman. Thank you so much for joining us. Well, that's Titan management, of course, ahead of the festival season, saying that they're opening more stores, and Tanishq does the wedding business. You have Zoya for luxury, and then, of course, CaratLane in between there. And all of those segments seem to be really picking up ahead of the festival and the wedding season. But with that, we're absolutely out of time on this show. Business Lunch will take all the action ahead.